the same point in time. We didn't do the work at the cash register, but rather we did services, for example, like accounting, billed the client, which is termed as an invoice with our data input form, sending out the invoice or bill to the client. That increases the accounts receivable. Then we have to record the receipt of the payment, which is typically called a receive payment form. Noting that doesn't tie into anything that we actually see that we send out to the customer. We might give them like a receipt or something like that, but really the form is the name of the data input field, which means that we're receiving some form of payment, cash, credit card, electronic transfer, whatever, for goods and services that were provided in the past, and we need to show the link between the invoice and the receive payment form, which is often something that software does above and beyond even the double entry accounting system. So that's what we're touching in on here. Let's go to the blank tab, and we're starting off with that same 20,000 of cash, inventory of 30,000, and owner's equity of 50,000, with inventory on the books then of 30,000. In our subledger, we're going to say it was 10 units for the account for that 30,000. Okay. All right, let's get back on over here. Let's say this is happening on, let's say 3/15. We'll just pick a random date and let's enter an invoice. So invoice for service done. So this is where did work like a bookkeeper or like a law firm, like a landscaper, and we invoice the client, which you could call a bill, but for accounting software, we typically call that data input form an invoice. So 1,600 invoice. We didn't get cash. What's the transaction? We got something, we got an IOU that we should have some legal recourse to collect on, therefore justifying that we put it on the books as an asset, even though it's just an IOU. The other side, recording the revenue at the point in time we did the work under an accrual basis, noting that we have to deviate from a cash-based system because we are needing to track the accounts receivable. So we're going to say, okay, there's our revenue goes up. We saw this in a prior presentation, so I'm doing it more quickly here. Let's put zeros across the board to the rest of these items. And so do 0, 0, 0. Okay, let's also add it to our accounts receivable, tracking who owes us the money by customer. Subledger that we need here because of this accrual account of accounts receivable. This is, I'm going to say this is customer A, which is going up by the 1,000.